But where was the gold? It wasn't there. You just give us the dollar equivalent and we'll go and get it in the market. I can tell you where I think it is. I think it was all bought by China.
The Trump administration might look to revalue the gold on its books.
No, that's absolute nonsense. Germany wanted a pretty good slug of its gold back, and France decided it wanted its gold back. Somewhere between 10,000 and 14,000 tons of central bank gold had been leased into the market, with very little of it returning. Rather than having gold, IOU notes replacing it. 1/3 to 1/2 of all declared central bank gold property, that's dead. The stock market, which undoubtedly has created a little bit of interest in the last year to 18 months, and you got bank deposits, and guess what? Interest rates have been declining, so that's getting less attractive. So you've got this sort of $5 to $6 trillion looking for a home, an investment home, in the savings of ordinary people. Where's that going to go? 35 to 45,000 tons, because it's continued to accumulate gold.
Earlier this month, Hong Kong opened its gold settlement system. And this week, several Chinese banks will ban the trading of paper gold for retail investors. What's China's strategy here?
Well, it's fascinating. Everything's happening at the same time. I think it might be worth mentioning a few other things. One thing which I haven't really noticed many people mention is that the People's Bank of China has said that they're no longer vetting, if you like, the export of gold. In other words, if you're going to take gold out of China, you would have to get the agreement of the People's Bank. In other words, you get them to sign a form saying that's all right. You take that to the customs officer, and they will then endorse it. In practice, until now, no gold basically left China except little bits going into Hong Kong for the jewelry trade, because there were always people, if you like, going from the mainland into Hong Kong, buying jewelry VAT-free, sales tax-free. And that was perfectly permitted. That was fine. But other than that, China's been Hotel California for gold. It goes in and never comes out. This is a big change. The SGE has now said that, yes, you don't need to ask us anymore if you want to export gold. And basically what this means is that you've got a free flow of gold between the mainland and Hong Kong. So this is extremely important because it's going to give the Hong Kong market huge physical liquidity. Potentially, anyway.
Markets are celebrating trade headlines while quietly ignoring China's biggest physical gold infrastructure shift in years. Alasdair Macleod notes that removing export approvals fundamentally changes how bullion can move between mainland China and Hong Kong. That's not a retail-friendly reform. Investors should watch what governments enable behind the scenes, not the headlines dominating financial television. Next, Alasdair Macleod exposes why China's decades-long gold accumulation strategy makes this policy change far more significant than it first appears.
Going both ways. So that I think is important. Why are they doing this? I think the answer is quite simple. You go all the way back to the early days of China embracing capitalism. The one thing they didn't really embrace was the idea of fiat currencies. They knew that fiat currencies always fail. So they decided from the outset to protect themselves against the failure of fiat currencies by secretly accumulating gold. We're not talking about the PBOC's own foreign exchange reserves. We're talking about off-balance sheet, if you like. What in other country would be described as going into wealth funds. Though in China's case, this was, according to, I think it's Article 3 of the regulations, this was distributed around various communist organizations, such as the People's Liberation Army, such as the youth wing of the Communist Party, and so on and so forth. So this is something that happened up until 2002. At the same time as this gold accumulation occurred, the ordinary citizen was not allowed to own gold at all. So there was no competition against the state in terms of it acquiring its gold. Then in 2002, the Shanghai Gold Exchange was opened and citizens were permitted to accumulate gold. And since then, they've taken delivery of over 28,000 tons. Nobody knows how much gold China really has, but I did some back-of-the-envelope type calculations, looking at various things like the foreign exchange flows, which also were the preserve of the People's Bank of China, looking at the supply into the market.
Governments rarely spend decades preparing for risks they publicly insist don't exist. According to Alasdair Macleod, China's long-term gold accumulation suggests policymakers viewed fiat currencies as inherently fragile despite participating in the global dollar system. That creates a striking contradiction between official monetary cooperation and strategic reserve. Wealth preservation depends on recognizing those silent preparations before financial markets fully price them in. Next, Alasdair Macleod reveals the overlooked evidence suggesting China's true gold holdings.
Both from MINS, which was a massive expansion between 1983 and 2002, and also sellers, investment sellers, particularly from Switzerland into that big bear market. Also, there was the gold leasing activity, because this was the original carry trade. You leased bullion at 1%, and you sold it into the market, and you bought US treasuries, which were yielding, well, in the early days, 10% or more. So, I mean, this was a very, very powerful carry trade, and it was obviously encouraged by the Americans, who were really trying to just get gold out of the monetary system and replace it with their own fiat currency. So China, if you like, its policy goes way, way back. Now, they would have known that they would need, at some stage, to protect their currency, the renminbi or yuan, whatever you like to call it, from the eventual collapse of the West fiat currency system. Until that time, they play along with it. They do exactly the same thing as all the other nations in terms of using the central bank, PBOC, to expand credit in desired directions. So the result is that, yes, they've got the backing, if you like, of gold in there. We don't know how much. My estimate originally was about 20,000 tons. Since 2002, they've obviously acquired yet more gold. They had a similar policy with silver, so they've got huge silver reserves, which we don't know. We don't know the quantity. That's managed more, if you like, as an industrial metal rather than a precious metal.
The biggest monetary transfer may have happened while investors were chasing treasury yields instead of physical assets. What Alasdair Macleod is highlighting is that gold leasing created incentives to move bullion into private markets while reinforcing confidence in paper currencies. That raises uncomfortable questions about who accumulated metal, as others treated it as a financial afterthought. Long-term investors should focus on ownership trends, not temporary price action. Next, Alasdair Macleod exposes why China's reserve strategy may have anticipated today's currency tensions decades in advance.
But undoubtedly, I mean, bear in mind that the last standard that China was on was a silver standard. So silver is still in there, if you like, very much with that in mind. So we're now getting to the stage where, if you like, the future of the fiat currency system, and particularly the dollar, which is the king rat, if you like, of fiat currencies.
The Trump administration might look to revalue the gold on its books.
No. I mean, that's absolute nonsense, because for a start, you've only got to sort of try and work out, where was all the gold which was leased, where did it actually come from? Came from central banks, yes. But it didn't, I don't think, came out of Bank of England's vaults, but I'm pretty sure it came out of the New York Fed's vaults. And this is confirmed by Germany's experience of trying to just get, I mean, there were obviously negotiations. Germany wanted a pretty good slug of its gold back. I'm going back to what, 2013. Eventually, they had to accept two things. First of all, they weren't allowed to go and see that gold. They were denied access. I mean, their own property, for God's sake. And the second thing is that it was 300 tons and it was going to take 7 years to get it back. What? Quite obviously, that gold had gone. And then recently we've had France. Now, this is an interesting one. France decided it wanted its gold back. And I guess that it had exactly the same problem, if you like.
Official reserve figures mean little if physical delivery becomes uncertain when owners ask for their assets back. Alasdair Macleod's argument suggests that Germany's lengthy repatriation process raises legitimate questions about the availability of vaulted bullion rather than simply administrative delays. Markets often assume custody equals ownership, yet those are very different concepts during systemic stress. Investors relying entirely on paper exposure should consider that distinction carefully. Next, Alasdair Macleod unravels where much of that missing bullion may have ultimately ended up.
Because, the Banque of France is a major gold holder. A lot of it stored in New York. So it wanted its gold back. You're repeating, if you like, what President de Gaulle did in 1968. What happens? Obviously, and so, okay, I'm supposing, but, tell me if this is wrong. Obviously, they were told, oh dear, I don't think so. This is, it's a bad time or whatever. Well, the chap who cancer stuff is ill. I don't know. Whatever excuse they came up with. So what did France do? France said, oh, okay, well, I tell you what, you just give us the dollar equivalent and we'll go and get it in the market. Problem solved. But where was the gold? It wasn't there. Bear in mind that, where is it? I can tell you where I think it is. I think it was all bought by China back between 1983 and the year 2002. There's an analyst called Frank Veneroso who looked at this in great detail. And he particularly interviewed the head of foreign exchange at the Bank of England, a guy called Terry Smeaton, who I used to lunch with occasionally. And Terry was, I found he's a lovely, open individual. He's dead now, unfortunately. But, Terry gave him a steer in terms of how much gold was being leased at that time. And he followed up this research, talking to banks and all the rest of it.
A reserve asset loses its protective value if access depends on someone else's permission. This is where Alasdair Macleod's thesis shifts from monetary theory toward custody risk, questioning whether reported reserves always represent immediately available metal. That's a distinction institutional investors quietly evaluate, while retail often focuses only on price charts. Wealth protection begins with understanding counterparty exposure before markets test it. Next, Alasdair Macleod reveals research that challenges official assumptions about central bank gold inventories.
His conclusion by 2002 was that somewhere between 10,000 and 14,000 tons of central bank gold had been leased into the market, with very little of it returning. In other words, central banks, rather than having gold, have, sort of IOU notes replacing it. Those figures, 10 to 14,000 tons, were 1/3 to 1/2 of all declared central bank gold at that time. So, how has this been resolved? It hasn't been resolved. It was obviously sold into the market as part of that carry trade, which I described earlier. And I think Frank Veneroso said at one stage, well, he didn't know where it had gone, but he said it's probably adorning the necks of Asian women, because India was always a big importer of gold. Smuggled before the Gold Act of 1992. But actually, I think that the Chinese were very clever. They were quietly taking gold in. Remember also that they invested hugely in gold mine production, and from 2007 onwards overtook South Africa as the major gold producer in the world. They kept the government monopoly on refining, and as I said earlier, gold would go in and it never came out. It just accumulated and accumulated. And you've got other holders there, because the SGE, the Shanghai Gold Exchange vaults, have delivered something like 28,000 tons to the public. Now, most of that went into jewelry, but some of it into coins, small bars, whatever, branded, if you like.
One unresolved transaction from decades ago can quietly reshape today's monetary landscape. Alasdair Macleod notes that leased central bank gold may never have returned, leaving balance sheets supported by claims rather than bullion. If true, years of reported stability may reflect accounting confidence more than physical availability. Investors should recognize that shortages become visible only when delivery is demanded, not when prices appear calm. Next, Alasdair Macleod exposes why China's domestic gold ownership could matter more than official reserve disclosures.
But you've also got savings. So you've got things like ETFs. That gold is all within the Shanghai Gold Exchange vaulting system. And importantly, the major banks offer gold accumulation accounts to their customers, which run alongside their deposit accounts. Now, bearing in mind that household savings in China run at a rate of over 30% of GDP, we're looking at an accumulation of savings in the order of between $5 and $6 trillion equivalent. So where does that go? I mean, there's no doubt that when gold gets a bid this time, the demand for it from people with gold accumulation accounts is going to take off. And of course, this is part of the whole scene, which is why they're getting rid of speculation, if you like, in the gold market. And just encouraging, if you like, or ensuring that the facilities are there for individuals to protect themselves from the collapse in our currencies. Now, they can't own foreign exchange because there are exchange controls. You need to have specifically permission from the People's Bank in order to do it. So where do individuals go? Well, I mean, they've got property. That's dead. That's a dead duck. They've also got the stock market, which undoubtedly has created a little bit of interest in the last year to 18 months. And you've got bank deposits. And guess what? Interest rates have been declining. So that's getting less attractive. So you've got this sort of $5 to $6 trillion looking for a home, an investment home, in the savings of ordinary people. Where's that going to go?
Retail speculation is being restricted just as long-term ownership channels are expanding. According to Alasdair Macleod, China's banking system increasingly offers physical gold as an alternative store of savings, while other investment options lose appeal. That policy mix appears designed to redirect household capital rather than simply regulate trading activity. Investors should pay attention whenever governments quietly reshape where national savings can flow. Next, Alasdair Macleod reveals why that enormous savings pool could transform global bullion demand.
I mean, I think that there is probably already something like 5,000 tons within the SGE vaulting system, which is backing these gold accumulation accounts. I mean, I don't know what the figure is. I can only guess. But I'd pencil that in. I mean, we're looking at a situation where China suddenly the state has probably got 35 to 45,000 tons, because it's continued to accumulate gold since 2002. You had 28,000 tons delivered into public hands. Now, some of that would have gone back in scrap, admittedly. So it's nearly 30, really, isn't it? And then you got gold accumulation accounts, you got ETFs, a few other things like that. I mean, they've got something like 70,000 tons, I reckon, out of a total above ground stock of 200 around the world. I mean, this is massive. It really is. They can protect their currency tomorrow. And incidentally, so can Russia. We get a lot of, disinformation about the Russian economy is in a state of collapse. But do you know what the government debt to GDP is? 18%. America, 125%. Who's got the problem? Your income tax in Russia is a flat rate of 13%. I think there's a higher rate of 15%. I mean, this is actually Austrian economists' idea of, sort of, if you like, free market conditions, low government intervention, and low taxation. Regulation, government regulation. Their bureaucracy is awful, but you don't have to come across it. No. Interesting, very interesting.
The loudest geopolitical narratives often ignore the balance sheets that ultimately determine monetary power. What Alasdair Macleod is highlighting is that unofficial gold ownership, not headline reserve figures, may become decisive if confidence in fiat currencies weakens. Markets usually dismiss these structural shifts until they're reflected in exchange rates and bond markets. Serious investors should watch asset backing rather than political messaging. Next, Alasdair Macleod exposes the hidden imbalance between Eastern reserves and Western debt burdens.
The world is an upside-down one to the one we are told about.
So talking geopolitically, what does the world look like in which China controls the most trusted currency or international trading system?
Well, I think it puts us back onto gold standards. And if we don't go with it, we're dead. And I can't see how we can go with it. The Bank of England sold all but 300 tons of its gold. As I said, I think that the US gold holdings are compromised, very badly compromised.
The greatest monetary risk may not be inflation, but losing credibility when the next reserve system emerges. Alasdair Macleod's argument suggests that gold could once again become the foundation of international trust, while heavily indebted nations struggle to adapt. That's a possibility markets continue to discount, despite growing geopolitical fragmentation. Wealth preservation depends on preparing before confidence shifts, not after.